Welcome back to my channel. In today's video, I'm going to be explaining what is the break and retest strategy. You've probably seen this all over the internet. You've seen people talking about the break and retest strategy, and you want to know what it is, how it works, and how you can start using it. You're in the right place because I'm going to be explaining all of that with live trading examples and things that you can take home and apply to your trading today. Before I get into this, I do want to plug my Instagram, Bowman Board of Trade. If you're not following it, go ahead and give me a follow. I will provide a link in the description. You're seriously missing out if you're not following my Instagram. I provide daily videos on the trades that I take, the setups that I'm watching, and how you can take these same setups in your trading. As well, this is the first time I'm announcing this. You can see the link in my Instagram, but I have started a website called Bowman Board of Trade where I am providing free trading resources. These are resources that I use every single day to approach the market with confidence and put on my trades with conviction because I know what has worked in the past. So I provide all of these resources for free. You can go check them out. But today I am making an important announcement. This is the first time that I've mentioned this on the internet, but I am providing coaching calls for everybody who's watching this video. What you can do is go to my site, sign up, and I am providing one free coaching call for everybody right out of the gate. If you're watching this video, you can sign up for one free coaching call. I will give you as much value as I possibly can pack into that video. I will tell you the strategy that I use, all of the setups that I watch, and how I approach the market so you can do the same. I'll provide you all the resources I can, answer your questions, and get you on the path to consistent trading. I want to solve your problems for you and tell you what's worked for me, and hopefully that can set you on the right path. So if that sounds interesting to you, go to my website, Bowman Board of Trade. I provide one free coaching call for everybody. If you want more coaching after that and you like my coaching style, you can pay me some money because I do need to be paid for my time, but I would love to give you guys this opportunity. I'll show you my trading, my coaching style. If you like it, you can continue in the future. With that being said, we can now get into the video on what is the break and retest strategy. I have felt myself converging towards this break and retest strategy for about the last 6 months. And as I refine my strategy and I drop indicators which no longer help me, and I drop different strategies and different signals, I slowly find myself converging closer and closer to one strategy, and that's the break and retest strategy. Now, why do I love this strategy? The break and retest strategy allows you to read raw price action. So it's not based on any indicators. All you need is red and green candles, and you can use this strategy. You can use it on any time frame. You can use it on the daily time frame. You can use it on the 1 minute time frame and anything in between, even the weekly. You can use it on crypto. It works in any market. Crypto markets, commodities markets, stocks. It works on everything. Why does it work on everything? I'm jumping to the fifth point here, but based on human emotions. And what's the common factor in all of these markets, on every time frame, every type of year? There is human emotions. You cannot take human emotions out of the market. So if you want a strategy that works consistently every day of the year, all markets, all trending markets, you want to look at something that's based on human emotions. Another reason that I love this break and retest strategy is it also relies on supply and demand principles, where you are looking at critical levels and you want to see price magnet towards supply and drop down to demand. And these are the fundamental laws that drive the motion of the market. Supply and demand. It's strictly based on that. Another thing that break and retest allows you to do is trade with the trend of the market. That is exactly what it does. It allows you to look behind all of these chart patterns and see and zoom in all the way to the smallest time frame and see who is controlling price and where do they want it to go. Another reason I love it is it eliminates predicting. So another thing I felt myself doing over the last 6 months is moving further and further away from predicting the market. See, you've heard me talk about a head and shoulders chart pattern, but the problem with a head and shoulders chart pattern is you see it forming, you're watching it, and you watch it for so long that you end up being biased towards that setup. So a head and shoulders, you'd be looking to short the market, but you end up waiting so long that that setup causes you to be biased, and you put too much weight on going short, and you're not open to changing up your strategy. And then the very last point, I believe that this is the most versatile trading strategy that you could ever use because it shows up on every single time frame, every market, like I said. So what does it look like? We'll get into that right now. So this is the basic shape of the break and retest chart pattern. Now, some of you out there are going to look at this strategy and just think, oh, it's that zigzag chart pattern. That's not complicated. It's got to be something more complicated than that. That looks way too simple. I'm telling you, simple is not always the worst plan. And in trading, it helps to keep things simple because the more complicated you get, the more you start thinking in your mind and you start fucking it up because you overthink it and then you get your emotions involved. You need to keep it simple. That's why I love this strategy. So what this strategy is, I wanted to provide a graphic that is not candlesticks because it makes it way easier to understand what is happening. So on the left here, you have your first, this is how you will start to pick up this chart pattern. On the left, you have this little top here, all right? Price comes up, some seller steps in, causes the market to go back down. What we have created is an inflection point. So some might call it a supply zone. This is what I was talking about. This would be considered a supply zone because this is where sellers are stronger or more aggressive than buyers. So I call this a critical area of interest. It could be just a price line. It could be a whole zone that you draw in your chart. It doesn't matter. Whatever it is a supply zone or a critical level of interest. So that is where you are expecting sellers to appear again, right? So sellers push the market down. Now what happens is buyers come in and push price up through that point. This is where the break in the break and retest comes. So you have that critical area of interest. Buyers now push through that zone, and these sellers are now in a position where they are in a losing trade, right? These sellers are now in a losing trade. Their trade has gone against them, and now they're experiencing pain in the market. The trade is not going in their favor, and now buyers are taking control. They were stronger than this seller who showed up here, okay? So now, price continues to go up, and then some more sellers come in even stronger, and they push price down back to this critical level of interest. Now it's a supply zone, right? So that's the key here. Over here on the left, it was a supply zone. Now that we're above it, it's acting as demand. So we want to see buyers show up at this level. Now, the key point about this strategy is that once price comes down into this level, these sellers over on the left, they're now faced with an opportunity to exit their trade for a very small loss or risk holding it going further against them. And what happens a lot in this situation is these sellers that first appeared on the left will end up stopping out of their trades for a small loss. So now they are providing liquidity for buyers to fuel the move to the upside. And the last thing that's the most important is that they are no longer participating in the market. They are selling out of their positions, and they are not shorting the market anymore because they're out of their positions. So what does that leave? That leaves more aggressive buyers in the market willing to push the price higher. So these traders just lost. They stopped out for a small loss. Now they are no longer participating in the market. Now there are buyers who want to push price up higher. So that is the psychology behind this chart pattern, right? This is the pattern that you want to be looking for. It is going to show you where sellers or buyers are interested in playing the market. And this is what I mean by seeing real time. This small chart pattern here you can see on any time frame. And in the next slide, I'll give you an example of what that looks like. So this is the bullish chart pattern. This is the bearish chart pattern. It is exactly the same psychology, just flipped the other way around. So here on the left, you have buyers that get into the market. Now the market is moving against them. They're feeling pain because their trade has gone negative now. And now when price moves up to this critical level, they will exit the trade for a small loss. And now sellers take control of the market and push it further down. So this is the break and retest bearish. So obviously there's two sides for this chart pattern. And I will show you examples of both of them right now. So what you can see on the right is the daily time frame. So I often pick my trades on the daily time frame. This is how I take the temperature of the market. And what you can see right here is we had an inflection point created at high of day, right where this left arrow is. And then price came down, broke through that level, and then came down to retest it, and we saw a large wick to the downside. This is where these sellers stopped out, and then these buyers now came in with strength. So that is what it looks like on the larger time frame. This is an example on the 4-hour time frame. You can see large wicks. Oh, this is a bearish example. So you're looking at large wicks to the downside. Price comes up, rips through. So this little zigzag pattern is what you need to start programming your mind to pick up on. And as you see it, as you study it more, as you look at examples, it will start to jump out at you as you're watching price action. You're going to start seeing these inflection points, seeing them being broken, and then retested. I promise you it happens all day. It happens every single day. I'm not sure there's a day where I haven't seen some example of this break and retest strategy playing out in front of my eyes. And it shows you live time who is controlling price. So number one, first look at a critical level being created. Next, you want to see buyers push through that critical level. And lastly, you want to see sellers retest that area to see if buyers are still in control of price. Here's an example on the 1-hour time frame. You'll slowly start picking up on these. Sometimes it takes a while to reject, but in the end of the day, it's still rejecting that level. Sellers are slowly stopping out. Buyers are taking control. Zooming all the way into the 5-minute, you need to start looking at these chart patterns and realize that they're not all going to look exactly the same. Some of them will be a little bit twisted, but the main psychology behind them is the same. So these examples that I've picked are ones that are easy for you to see because I'm showing you how it works now. But I'm telling you, when you look at the market, it's not going to be this cut and dried. Sometimes you're going to have to look, watch price action, and understand that this is what's actually happening. All the way in on the 2-minute, here's an example again. You can see, looks a little bit different. Some of them are not textbooks. Some of them have multiple retests. But this is what you need to pick up on. You need to not get faked out by these red candles. You need to realize that these are sellers trying to retest how strong these buyers are. That's the whole idea of this strategy, is that these sellers are testing buyers. Are they going to defend this level, or are they going to break and we're going to see lower lows? If they do defend this level, that is a good opportunity for you to long the market and play with those large institutional buyers. So this slide says predicting versus reacting on the top of the slide. right here, predicting, reacting. Now, why do I talk about predicting and reacting? I mentioned it in the very first slide, but this is the biggest thing that this break and retest strategy will allow you to do. It moves you away from predicting and towards reacting. So what happens when you're predicting the market? Let's get into it. When you're predicting, you are trading to satisfy your ego. So you want to convince yourself that you are right, that you can predict where the market's going to go, because the market is crazily erratic and you feel like an absolute animal. You feel like you can read the market exactly. If you put on a trade, you predict it, and it goes in your direction, you feel on cloud nine. Crazy euphoria, you've made money. That is trading to satisfy your ego, and you do not want to do this. Predicting the market will cause you to satisfy your ego in trading, and you will love to be right, and you'll think that you understand something about the markets, and that is the most painful place to be in. When you think you understand something, your next trade, you put on a trade and you get absolutely smoked, and then you think, maybe I didn't understand something about the market. What you didn't understand is that the market cannot be predicted. The market operates on the individual trade. It's completely random. So when you predict, you leave yourself vulnerable to experience pain from the market. So let's think about this for a second. If you're predicting a move in the market, you need the market to go in this specific direction for you to feel good. And if the market goes against you, you're going to feel pain. So right away, you're admitting that if the market goes this way, I'll feel pain. If it goes this way, I'll feel like I did the right thing. I'll make money, I'll get some sense of euphoria, and I'll feel like I'm the man. What you're doing is you're giving the market permission to cause you pain. And that's a terrible place to be in. And that comes from predicting the market. We'll get to how you can solve that in a second on reacting. But predicting also causes you to be attached to a certain outcome of your trade. Right? Like I mentioned before, you need the market to move in a specific direction versus waiting and being objective to seeing what price is telling you. Now, one of the most important things is when you predict the market, you blind yourself to other opportunities. So if you only are looking for opportunities to long the market, or you even have a position that's long in the market, you will not be able to see those red candles. All you will be able to see is a green candle, and as soon as you see a red candle, it will be invisible to you because that's moving against you, causing you that pain that I was talking about. Confirmation bias, when you are looking, let's say Head and Shoulders, you're looking for an opportunity to short. So all you can see is red candles, things that are moving in your favor. And you are basing your decisions off old market data. This is a lagging indicator, and I explained in the last slide how you can zoom in on the smallest time frame and you can see this break and retest happening. Therefore, that is price action that's happening in the moment that you can use to tell you where the market is going. So how can you move from predicting to reacting is with this break and retest strategy. And now that you're reacting to the market, you can now read raw price action without indicators. So when you're using indicators, you're not actually reading the market. You're just waiting to see what happens at this certain indicator. You're waiting for the indicator to tell you to go long or go short, like the RSI, the MACD, all those special indicators that people use. And it doesn't allow them to actually read price action as it's happening. You need to get very good at reading these candles and understanding exactly what they mean in the moment. And as you do this, you'll be strengthening your muscle of perception over time. So the less crutches you use in the market, the less indicators, the more you'll be able to rely on your analysis, and you will be able to strengthen that muscle over time so you will trust your own analysis. You will see something appear in front of your eyes, and you will say, I know how to react to this. I know how to manage my risk. I know how to place my targets. and I trust my ability to manage this trade. That's where you want to get, ideally. Reacting to the market also keeps us in an objective state of mind. So it removes you from predicting to waiting to see what the market is constantly telling you. And it allows you to focus all of your thoughts on the now moment, what's happening, the price action that is showing itself to you right now. The present moment has all of our answers. I heard somebody say this in a quote, but the present moment has everything you need to make your decisions. And sometimes you're just looking at the market waiting for an answer, but sometimes a lack of an answer can actually be an answer. You might have to think about that for a little bit, but it's very important. Everything that the market is giving you can be used and should be used to make your decisions in the market. So the main thing that I want you to get out of this video is look at these chart patterns right here, this pattern recognition. Start journaling when you see this in the charts. Even if you didn't put on a trade and you see a pristine break and retest, take a screenshot of that, put it in your journal, go back and read it so you can slowly start programming this pattern into your mind. And I swear, once you start reading it and journaling it, you will see it jump out at you. If you are looking for something, you will find it. That's how it works. You program your mind to see something constantly. You will see it over time, and it will slowly start jumping out at you. And you can see it on all time frames, and it will really allow you to see who is controlling price and where it's going to go, because you want to play with the big money institutions. It also allows you to think of price as an auction, which is ultimately what it is. And sometimes we forget that, but that's why I love this strategy. It's based on supply and demand, and it allows you to think in terms of market auction and who is controlling the price. You can use this chart pattern as a clue to market sentiment. That's why I said you can look at the daily time frame, the weekly time frame. It all plays into this break and retest. And what you're seeing through this strategy is the true feelings about the market participants in live time. Like I said, these sellers stopping out, they're stopping out because they want to exit the trade with a small loss as opposed to a massive loss. And you will be able to see that in the candles. You'll be able to see them stopping out, being afraid because buyers are here or sellers are here. As you strengthen that muscle, you will slowly start seeing these. That's all I have for this video. I hope you enjoyed it. Take this strategy, start journaling it, start taking pictures, screenshots, put them in your journal. If you have questions on how this strategy works, message me in the comments. Like the video if you like this chart pattern and you use it yourself. That's all I got for this one. I'll catch you in the next one.